This Week in Economics on the 22nd of March 2013. As March Madness speeds along, so do we. On some of the outlets, you will hear this on the 22nd and perhaps on the early 23rd. But nonetheless, the report would be timely. The Federal Reserve Open Market Committee met, and there was a press conference by the chair of the Fed, Dr. Janet Yellen. You will hear the press conference in its entirety on most of the outlets, time permitting. Basically, what has happened there, the Fed is monitoring, and there was some discussion of the integrity of data. Data, big data we're talking about, is not a perfect situation. And there is, in our opinion, too much talk, reliance in the markets on so-called perfect data. The economy is dynamic. It's not static. And you can't for those of us that do modeling and projections, you can't base your projections on what happened in yesteryear, because the economy is ever changing. We'll talk about the new bank instituted by the Chinese and the IMF, which is a change. Things are moving forward, things are not moving backward. Now, in some countries, the financial policy of some countries is backward, based on the 20s trickle-down theories, etc. Trickle-down theories have never worked and never will work. And in the U.S., there is some of that base there. How it works in this modern economy is very dubious at best. They tried a modified version under G.W. Bush. And, of course, you got a depression. And this is what the problem is. Although the U.S. is one of the modern industrial capitalist economies that is more self-contained than others. However, the banking system and the trading system is not self-contained, and that is where the 800-pound gorilla appears on the scene. And it's a continual conundrum. And part of this is that many, particularly on the Wall Street sector, would like to see interest rates stay exactly where they are. That, of course, will not happen. But at the same time, in the economy, your worker participation rates running around 62 or whatever is going to be lower because of demographics, birth rates, etc., the older baby boomers retiring and moving out of the system. And some make the argument, well, fewer people are working. Yes, fewer people are working, and they've come up with all kinds of nefarious schemes to raise the amount of workers. And, of course, one is this big hullabaloo about immigration policy. Immigration policy in itself has to be modernized, no doubt about it. And there is the economic component there that people that are not documented now, many of them do pay taxes, and some that are in the so-called underground economy, or is a cash economy, I'm not talking about the shadow banking, are in a position where they would contribute more taxes to the economy. In a modern economy, many have demonstrated that taxes are appropriate to many improvements. For instance, if you want quality education, you're going to pay for it. If you want better highways, better transit systems, you pay for those. Now, if you don't want those, you don't get those. So this is what the big argument is in some of the countries that attempt to do austerity. Austerity has never worked. But at the same time, when you try to implement that, your economy is out of sync with other economies in the world. Let's go to a little bit of oil price in here, and we're going to sort of skip around before we get to the cherry yellow. And this is from the, I believe, the Bloomberg service. And this is Saudi Arabia, how they see oil pricing continuing on, and with the shale oil, situation there. And I'll just read a little bit of this. Oil prices won't rebound to $100 a barrel because the increased pricing would draw more of this shale product in to the market. That is from Mohammed El Madeh, that is the Saudi Arabian governor to OPEC. I think it will be difficult to reach 100 or 120 another time, Madeh said in the news conference in Riyadh. This will let the high-cost producers come back, in Saudi Arabia, the leading OPEC nation in defending its share of global market, will keep investing to maintain its current output capacity. So in other words, as long as you have output capacity at today by the OPEC members, you are not going to see this pricing floor, with the exception of pure speculation. But the problem with speculation is, on a commodity such as petroleum product, you can only maintain it for a few days. And I was just looking at petrol prices the other day, and now that's based upon, and we'll get to that, the delivery, say for instance, in April. Brent crude benchmark has declined 50% the past year. Saudi Arabia and other OPEC nations are committed to maintaining output in a global surplus, whereas this shale oil companies are one of the highest cost producers but benefit from high prices, no doubt about that. That is Economics 101. But the problem is, as long as there's a glut out there, these oil producers with the fracking will not be able to reach their benchmarks. The world needs $40 trillion of oil investments in the next 2 decades to meet the growing demand by emerging nations. That's Dr. Ahmadi. Demand will grow 1 million barrels a day every year for the next 15 to about 111 million barrels a day there, and that's one of their representatives there, Nasser El Sareh. He's their national representative. Saudi Arabia produces 9.85 million barrels of crude a day in February, the most since September of 2013. This is from Bloomberg. The U.S. reached 9.4 billion barrels a day this month, the highest rate according to the Energy Information Administration, data back to 1983. And Brent crude climbed 1.6% on Friday to $55.32, down from $115.71 in January of 2014. So those days are gone. They will not return. Saudi Arabia holds a big role to keep unity in OPEC, which supplies about 40% of the world's petroleum product. In the last 55 years, OPEC and non-OPEC producers cooperate on production cuts 19 times. Russia, which is, of course, not a part of OPEC, didn't always follow suit when cuts were promised. Well, that is a situation where everyone is trying to get market share. The problem is the fracking oil producers will definitely have problems meeting their particular price sensitive goals. We'll go to Reuters here and a little bit on the U.S. markets and where they are. The caption here, Investor's Eye data as stocks approach records. Well, you'll have these records, and they have been records. President Obama, of course, has talked about it in an anecdotal way and also in a statistical way. concern here, according to Reuters, about the Fed's path of interest rates and the soaring U.S. dollar result in big swings in the S&P 500 on a daily basis, even though overall expectation for volatility remain low. The day of volatility in the markets, if you have been watching the markets the last few months, there's really not been very much volatility as there has been in the past. In the past, you would have periods of market stability, but at the same time, due to recessions and depressions, you have these peaks and tremendous lows. In other words, the market would rise 50 points, and then eventually it would lose 100 points and it would retreat. Now you're beginning to see a much more consistent situation there. Now, boosted by reduced expectation of approaching hike, the S&P and, of course, NASDAQ composite came close to record there. But this is only temporary, and Chairman Yellen, Dr. Yellen talked about that they are watching things and they're not saying that they are using the same prudence as before, but at the same time they are constantly looking at data. Now, consumer prices here in January fell in 6 years due to low gasoline prices. Now, Tuesday's February Consumer Price Index is expected to be up 0.2. That's according to a Reuters poll. That may or may not happen, and of course we'll keep our eye on that. The U.S. economy growth prospects and the outlooks for rate hikes have been clouded by a strong dollar. The greenback is up 20%, and it's caused about 50 companies to reduce earnings. Good for some, not good, so good for others. Expectation for Q1 earnings are already off to a poor start. For every company has pre-announced earnings above Wall Street expectation 5.5. Others have announced below expectation. That's Thomson Reuters here. Investors worry about falling oil prices and how much the recent drop is attributed to global economic weakness. There's no doubt to have some weakness there, but there's a lot of oversupply out there. Also, energy companies account for 8% of the S&P 500 companies, but volatile crude oil prices reverberate across the economy. No doubt about that. People that are, for instance, in heavy equipment, there is a problem. Let's go to the BBC here, and the first story is, we'll do AIG. Stockholders finally will receive $970.5 million over pre-crisis shares, saying that AIG should have known about the subprime mortgages there, and of course they did not. Payouts initially agreed to, that was in August. AIG created credit guarantees for subprime mortgages and was bailed out, of course, by the U.S. government in 2008. Stockholders claimed they were misled by the exposure to mortgage subprimes, those given to people with patchy credit histories, but there's money to be made there. And in the same light, the U.S. bank Mellon paid $714 million in a fraud probe. There, U.S. authorities claimed its customers were promised the best possible execution for currency transactions, but were instead given the worst rates there, and that has been, as they say, resolved. We are pleased to put the legacy FX matter behind us. That's from the largest custodian bank has said. Investors begin with the investigation being a whistleblower filed a complaint to the Attorney General in New York. So lawsuits included filings by Department of Labor, the U.S. Securities and Exchange Commission class action participants. So in other words, we have many participants here. Let me get the other story.